Good day, everyone, and welcome to my YouTube channel at Illumination Hub NG. Kindly subscribe to my YouTube channel and also click on the notification bell so that you can be notified whenever I drop a new video. So today we're going to be looking at the calculation on IAS 2 inventory. So we're going to be doing some calculations. So let us quickly treat one of the questions. That is the first question, which focuses on the net realizable value. Okay, so let us delve into this. So we were told that in the question that inventory, okay, the inventory cost is 100,000 naira. Okay, the inventory cost is 100,000 and the sales value is 220,000. Inventory cost 200,000, the sales value 220,000. So we now have the selling cost as advertisement 10,000, transport 50,000, advertisement. Okay, we have this one should be, yeah, let's see, okay, let's ignore this. Okay, let's ignore this. Okay, so let's assume that we have advertisement 10,000, we have transportation 50,000. Okay, we are not told that rent is 20% of sales, which is relevant. Okay, now we're told to determine the amount of inventory cost to be recognized according to IAS2. So we're told that IAS2 values inventory as the lower of cost, lower of cost, and net realizable value. So in this case, what is our cost? Our cost is 100,000 naira. Okay, 100,000 naira. So our net realizable value is sales. Okay, so let's say our net realizable value is sales. So our sales is 220,000. Okay, less cost to sell. So our cost to sell, we have advertisement of 10,000. Okay, we have transport of 50,000. Then we have rent. So the rent is we're told that it should be 20% of sales, or 220,000. Okay, so we have take this out, we're left with 2,200. Okay, 200 times 20, that's 44,000. Okay, times 20 will give us 44,000. So we have our rent as 44,000. So when we add this up together, so we have 10 plus 50, 60, 104,000. Okay, 104,000. So our net realizable value will now be 61. Okay, that's 116, 10. Okay, 2. So that's 116,000. Okay, so 116,000. So we can see that out of the two, the cost is lower. The cost is lower. This one is lower, and this is higher. So according to IAS2, we're going to recognize the 100,000 in the income statement because it is lower. Okay, so let us move on to the next video because we don't have much time. Okay, so let us go to the next question. The next question says that Unipharmaceuticals has a closing inventory at the end of a period as 10.2 million naira, okay, which was estimated to have a fair value of 11 million naira. The cost associated to the sale is 500,000 naira. You are required to determine the closing value of inventory to be recognized in the income statement. So let's say solution to this question. Okay, so we have the initial cost as 10.2 million. So let's say this in million, that'll be 10,200. Okay, so we now have the net realizable value, which is the sales. So we are told that the sales is we have a fair value. So let's say fair value. The fair value is 11 million naira. Okay, so 11 million naira as the fair value. So we now have less cost to sell. Okay, cost to sell or cost of selling the item, which is 500,000. Okay, so at the end of the day we have 10,500. Okay, so in this case the cost is also lower than the net realizable value. So there are times whereby the questions may have, at the end of the day when we do the computation, we're going to be having the NRV lower than the cost of the asset. So let us move on again to the next question. So this is how you're going to solve when you're recognizing the closing value of inventory. So let us look at this question. Let's look at this question. We're told that the following is the trial balance of patients. Okay, so kindly read through so that we can meet up with the time that we have. So we have revenue, we have capital, earnings, retained. So we're told that the additional information says the inventory that was on hand as at 31st December of 2025 was amounted to 350,000 naira, being the original cost of inventory. So solution. So we have let's calculate the cost of inventory. Okay, the cost of inventory recognizable is okay, according to IAS 2. So we have cost. The cost amounted to 350,000 naira. We have 350,000. Okay, the initial cost 350,000 naira. Okay, so we have the lower. Is also lower of cost, and so the NRV, that is the sales. So we are told that the sales 420,000 naira. Okay, and cost to sale. So less cost to sale, selling cost of 120,000. 120,000. Okay, 120,000. So we have 300,000. Okay, so we have 300,000. So in this case, the NRV is lower compared to the initial cost. This is higher. Okay, so let us move on. So we're told to prepare the statement of profit or loss account, okay, for the year, and also we were told to prepare the statement of financial position. Okay, so let us move on because what we are recognizing is the 300,000 NRV. So let us do the workings. So we have so we're going to be fine toggling around the screen. Okay, so let us solve the income statement. Okay, so pardon me for the heading. Okay, this is the income statement for the year ended 31st December 2024. Okay, so we have the revenue. We have revenue as, so the revenue, what is the revenue that we have here? We have 900,000. Okay, we have 900,000. Less cost of sales. So we have the cost of sales as let's see the cost of sales. So we are going to do the working. We're going to work out the cost of sales. Okay, so the cost of sales. So let's do the working here, please, before the time is past. Okay, so cost of sales. This is so we have the opening stock. So the opening stock in the question, let's inventory as, this is it, inventory as starts That's 200,000. 100,000. Okay. Add purchases. Okay. Purchases. The purchases is 650,000 as well. We can see here. 650,000. Okay. 50,000. Okay. So we have 850,000. So also we had, do we have carriages? Let's see. So we have purchases, inventory at start. Okay. So we have receivables, we have payables. So let us move on. So we have 850,000. 850,000. So less. We're going to the cost we're going to be recognizing is this 350,000, which is what the lower based on the IAS standard. Okay. So less. So we less the cost. That is 300,000. So this is 850. 300,000. So we have 550,000. Okay, 550,000. So we now come back here, cost of sales, revenue, cost of sales. So workings, okay. So based on workings, we have 550,000. Okay, 550,000. So we have 450,000. So our gross profit is 450,000. Okay. So we now have in the question other income. Okay, let's see other income. Other income. Let's see what we have there. We have other income as 370,000. So 370,000. We also have operating expenses. Operating expenses. Okay, operating expenses. So those operating expenses that we have there. We have 200,000. So we less that. We deduct that 200,000. Okay. So we also have what do we have again? We have, so this will give us the profit. Profit before tax. So the profit before tax is 450. That's 920 minus 200. Okay. 350, 370. So this should be 350, please. This is not 450. So we have 520 as the PBT. So we now less tax. In the question, we're given that tax, okay? Tax should be 170,000, okay? So tax is 170,000. 170,000, okay? So we less tax. 170,000, we are left with a balance of what? 350,000. 350,000, okay? So we have our profit after tax. Okay, so this is how we're going to prepare our income statement. Okay, so what we did was to do calculate the cost of sales, or what we know as the cost of goods sold. Okay, to be able to determine our gross profit. Okay, so we have in the revenue as 900,000 from the question, 900,000. So the cost of sales that was done here on the workings, okay, we're left with what? With 550,000, which we're going to take off from the revenue. Okay, 550,000. We are left with the balance of 350,000. Okay, so now we have other income. Okay, we add the other income back. Okay, we are adding other income back. Add other income 370,000, and less. We are lessing what? Operating expenses of 200,000. At the end of the day, we are left with what we call the PBT, or profit before tax. Okay, profit before tax. Okay, so after that, we now what? We now deduct the tax. Okay, we're given tax as 170,000 naira in the question. Okay, so 170,000 naira, we less that off and we get what? 350,000 naira balance, which is our profit after tax. So thank you very much. In the next video, we're going to look at the statement of financial position. Okay, so watch out for the next video, and please kindly subscribe and click on the notification bell so that you can have be notified about the next video I am going to be dropping. Thank you very much for your time and have a great day. Bye.